This is the S&P 500 one-year reading for the year 2023. It's currently October 26, 2022, 10:05 p.m. Eastern Time. The overall theme and trend direction, we have the beginning of a rally. So this is pretty bullish, guys. The start of a rally, the sun card usually means the beginning of a rally, especially on a generalized scale of a theme card. It's crossed with several notable breakouts throughout the year. And the sneak preview card, we pushed the upper end of the range higher on the scale of a multi-year chart. That would also tie right into this being the beginning of a rally. It continues onward into 2024. So guys, if you're new to this, the way Eso-Meta analysis works, these cards going across here are what we call timeline cards. Each of these four clusters represents 1 month out of the year. So January, February, March, April, May, June, July, August, September, October, November, December. Each cluster of four. The first card in each cluster is the early part of the month, the first 2 weeks roughly. The second card is roughly the second 2 weeks of the month. The card at the top represents energies around the month's high. The card at the bottom represents energies around the month's low. Where we have stars, those are the highest highs or lowest lows, or prominent highs that'll stand out on the chart. And purple is where we see significant trade opportunities. Before we go any further, guys, let's check out 2022 and see how we did. I know it wasn't my best reading, but it was still pretty accurate, especially considering 2022's 1 year was created on May 11th, 2022. So what I've done here is, this is a year-to-date chart. This thick gray line right here represents the first day of the year of 2022, and each of the dotted lines represents the first day of a month. I wonder if it makes sense to do it in the weekly. Let's try. So the theme was sideways price swings, and several fake outs throughout the year. Looks like we had a fake out in February, we had a fake out in May, and we had a fake out in September. So this looks like a fake out. We broke through this level right here, continued downward, but then we turn around and we come back up. This technicals would lead people to believe that we're going much lower based on breaking through this support level here. So that's a fake out. That was in February. Fake out in May. This is May. Wait. January, February, March, April, May. This is May. Another fake out. Boom. We passed by this thing, this price level, making it appear that we're going even lower. Instead, we turn around and we rise up again. And then the final fake out of the three for the year was in September. You could say another fake out here as well. In two ways, we broke through this price level, so you'd think we would go much lower. And then over here, we broke down through the 200-day moving average, scaring people into thinking we were going lower. Instead, we turned around and we've rallied higher. It's pretty solid, and that was a low in September. This is a low October 10th. It's like right on the line, so still pretty solid. You have to give it a little leeway. Behavior around the high, the halting of a bullish trend, marked by a sharp decline through key support. key support. Behavior around the low, we have sideways, back and forth erratic behavior, back and forth through the same price level. Could be this price level right here, horizontally, like 365-ish, 370. And as far as highs, so we had a notable start of a decline here, right at the start of the year. We had a high and a low in January, so a high and our first low in January. Then we have, this is where we went a little awry. I saw May and June as being highs for the year. Instead, they were crests. So we have May, and then part of June. We did have the sharp decline at the end of June off of the crest. And then we had a low in July, which really ended up being in June. But close, very close. And then another one we have in August, which you can see we had in July. And another one we had in September. So we go... We had a low in September, not August, what am I saying? So there was a low in September, at the end of September, and then we have a low in August. Or excuse me, a low in August and a low in September. I mean, pretty solid, aside from the little bit here with the high being, this part here, I saw much more move here, but it did end up being during a retrograde, around a retrograde. So that was, I'd say I'd give this probably an 80. I'd have to go through, I'll have my assistant go through and look at it, but still a pretty solid reading, especially being that it was created on May 11th. So, all right, guys, so back to 2023. So we have this bullish, the beginning of a rally. There's a lot of price change covered to the upside here, and several breakouts. It looks like we have major breakouts that'll stand out on a one-year chart. The first one is around the high in April. We have another one around the high in July, the high in August, and somewhere around the high, early high in September, and then a final breakout in early December. So those are the four breakouts, right? Wait, 5 breakouts. 1, 2, 3, 4, 5. So those will be significant to look for. And in the midst of the breakouts, it looks like there's some opportunities, obviously, to open up short positions. Behavior around the highest high, we have bearish price swings and a sharp drop that'll stand out on a year-to-date chart at least. Behavior around the lows, the lowest low, this will be significant trade opportunity. There will be significant trade opportunities around the low when rotating sideways along a support level. And the low will form when we have a move higher through resistance. We stay above resistance for a brief period of time, and then we break back down through the same price level. It'll be a key resistance, at least on a 1-month chart, but probably on a year-to-date chart. But on a multi-year chart, the lows of this year, 2023, will really stand out as opportunities. Okay, so early January, it looks like we decline out of a crest, the completion of a rally in early January. There's a significant trade opportunity around the high there, and we fall quite a bit from the high, from the January month's high, declining down to a low, and it looks like the low is in the low is probably in the second week of the month of January, and we declined from a price level to we declined from a support level down to a second support level, bounced around that support level for a bit, and then we break down through multiple support levels on the scale of at least a 1 month chart. And it looks like there's a beginning of a rally there at that low. It's a prominent low that'll stand out for the year, and it looks like it's revisited probably in late. Either there's a low. Two things may happen. There's either a low here in the first 2 weeks, or there's a low in the last, like on the cusp of January and February, or there's a low in both locations, which is probably what will be the case. So we rally out of that prominent low, which we meet probably in late January, where we have multiple headwinds pushing at the S&P lower. There's a rally, a lot of price movement actually covered in the first week of February to the upside. There's a trade opportunity on the cusp there at a low or a trough, and a lot of price movement to the upside. The rally in early February completes. The rally along a diagonal trend line in early February completes with a fast sudden move to the upside, and then a decline through that diagonal trend line with increasing volatility on the way down. We sell from a year's high in February. Our first year's high in February, which it looks like it's probably hard to say what week it is, but we're range bound at the low, so we don't go to a lower low. It looks like we probably have that prominent low twice there, January and February, but we don't go to a lower low in February. We rally in early February, break down through that diagonal trend line from a peak or crest that's overbought, and a prominent high for the year thus far. That looks like it's probably in the third week, and there's a notable fake out late in the month of February around the months around a crest or high, where we'll attempt to establish support, but we decline. We attempt to establish support to the downside, but it looks like we decline further, and then we have another prominent low, probably another significant low for the year in early March. There's a lot of price movement in the first week of March. Multiple failed attempts to break through key resistance on a year-to-date chart. We do some sideways rotation around the month's high in March, increasing with bearish sentiment as we move forward in time. Behavior around the month's low. It looks like this is where probably where the real rally commences, around the low of March, which is probably going to be another important low for the year. We do sideways rotation along that support. And then there's a fast sudden move higher, marking the end of that period of sideways rotation. It looks like that fast sudden move higher is probably in the third week. And then late March, we have volatility that increases with volatility as we move forward into the end of the month. Another low there, prominent low. It looks like mid. And keep in mind, this is with an upward, a strong upward trend, underlying trend. So the lows are probably going to be higher lows as we go, consecutively higher lows as we go. In most cases, that's likely what will happen. So in early April, we have again, well, actually, it's probably in mid-April, we have another month's low, like somewhere on the cusp between the second and third week, or we have another year's prominent trough or low. And in early April, we decline from a crest with sideways fluctuations with a bearish trend, but that goes into the low, and then there's a sharp drop into the low mid-month of April, and then we do erratic back and forth behavior, erratic behavior back and forth through the same price level in late April, and it looks like there's also a breakout there to the upside. So there's a breakout to the upside of the April high there's a breakout there, and eventually what we do is we hit resistance, a key resistance level on a multi-year chart, and we break down with consecutively lower spikes up on the way down, bringing us to another trough here in early May. Looks like this trough and there's also a swing trade opportunity, a really important or juicy swing trade opportunity around the low there in April when we're doing the sideways fluctuations with a bearish trend preceding a rally. The swing trade opportunity involves a period of volatility with a sharp drop in that period of volatility. And it looks like there's a cash out opportunity around the low, or a significant drop there. It looks like towards the second or third week. All right, so in May, sharp decline off of a peak or crest that would stand out on at least a 1 month chart, probably a year-to-date chart. We go to another prominent trough for the year after there's a failed attempt to break through key resistance around the month's high for May. Technicals will lead us to believe that we're going to break out through that price level, but instead we turn around and we decline through key support on at least a 1 month chart, probably a year-to-date chart. And the decline taking us into the month's low in May is a significant opportunity to open up a long position in the midst of a period of volatility where there's a sharp dip that'll stand out at least a 1 month chart. And it looks like there's a pretty notable move higher on the cusp. I'm picking up on a notable move higher on the cusp between April and May, between those two troughs. Late May, we have, out of a decline, there's a notable move to the upside. I'm advised to avoid risk near the low towards the end of the month there of May, and there's a notable move out of the low from the bottom of a range to the top of a range, at least on a 1 month chart scale. And just there on the very cusp of the month of May, we bump up against resistance and break through the resistance momentarily. Advised to open up protection right there at the cusp, where we'll see a very brief year's highest high thus far, which will be easily missed because off of that brief high there's a decline through multiple support levels on a year-to-date chart in early June. There's a swing trade opportunity around the June month's high, which is likely also the highest high for the year thus far. And the swing trade opportunity around, there's 3 pokes through the same price level around the month's high and a sharp drop from that third poke. The swing trade opportunity involves a period of volatility with a sharp drop that stands out on at least a 1 month chart. So I'll be looking for something around a resistance level with a sharp drop there. And then there's a prominent trough. It looks like we go to another prominent trough for the year in late June. The June month's low will be late June, and a prominent trough in there in the midst of some sideways, either bullish price swings or sideways price swings. Probably bullish price swings, because it looks like we have yet another high here in July. Bullish price swings take us out of a prominent trough for the year in early June or in late June into a bit of a decline in early July that increases with momentum moving forward into the mid-month. There's a U-shaped dip around the month's low there, forming near to the intersection of 2 perpendicular diagonal trend lines, and there's a swing trade opportunity around the month's low for July, involving a period of sideways fluctuations with a bullish trend that precedes a decline. Significant trade opportunity somewhere in the first or second week of July around a trough, and it's connected somehow to the price level that we saw when we attempted to establish support in late February before a decline commenced into the low of March. So there's a connection there to a price level, and then late July, we have a move higher, a notable rally higher that'll stand out on a year-to-date chart. The rally offers an opportunity to open up a short position, and we come up against what appears to be the same highest high that we had in June. We revisit again in July, and we sell from near oversold territory on RSI there. If we're looking at the SPY ETF, there's a breakout there in late July as well, in the midst of that rally higher, and 2 swing trade opportunities as well. One of the swing trade opportunities involves a period of volatility with a sharp dip that'll stand out in that period of volatility, at least on the scale of a 1-month chart. The other swing trade opportunity involves that same swing trade opportunity we spoke about the month's low in July, where there's sideways fluctuations with a bullish trend preceding a decline, right? So late July, around the second test of the high, the second test of the highest high thus far for the year, there's an opportunity in that rally to open up a short position. And it looks like the rally continues, matter of fact, into August. Even in the face of overwhelming headwinds and expectations that we would fall, we continue to push higher or stay high into the high for July, maybe right on the cusp there, like the last week of July, and then we have either the same high or a higher high in August. Looks like towards the end of August, there's a notable reversal that would stand out on a year-to-date chart, and there's 2 swing trade opportunities around the crest or the high for the month of August. There's also a breakout there that would stand out, at least temporarily, and in the midst of that rally higher, we turn around, there's an opportunity to open up a long short position. The high for the month of August also forms after a failed attempt to break through key resistance on at least a 1-month chart, followed by a decline through key support on at least a 1-month chart. And the 2 swing trade opportunities, looks like one of those swing trade opportunities is near a crest, probably the 3rd or 4th week of the month of August. And then there's rallying that increases with momentum moving forward into the month. In early September, moving into the mid-month, rally that increases with momentum moving forward into the month. And it looks like a swing trade opportunity involving a period of sideways fluctuations with a bullish trend that precedes a decline. Around the month's high in September, we have sideways rotation along a key support. We rise to meet the nearest critical resistance, and then we bump off of it and come back down and continue rotating sideways along support. Behavior around the month's low. The month's low for September is within close proximity to a prominent crest for the year. It may not be a highest high, but a prominent crest for the year that would stand out. And there's also in late September, there's also a key trade opportunity, cash-in opportunity at a significant trough for the year. It would really stand out as an opportunity when we attempt to establish support at like a critical support level on at least a year-to-date chart, possibly like a multi-year. There's a crest towards the end of the month as well. So it may be that the decline starts in late September and continues into a significant low in October. It looks like there's a lot of price movement from a crest in late September into a trough and years low, prominent low, I should say, that takes place in September. In early Interesting. This may actually be the year's low in here. Interesting. Yeah, so we have the year's low after the highs, even though it's a super bullish thing. So it's like we come back from it pretty significantly, it looks like. In early October, we have a period of sideways rotation along a key support, and there's a sharp dip that'll stand out on at least a 1 month chart that takes place within that period of sideways rotation, and the dip takes us to a support level that was recently a past opportunity. So it may be that we hit the same lows here, and these may be the lowest lows here. Matter of fact, that's probably at somewhere between the end of September and October. There's a year's low. So that there's a notable reversal there, guys, at that fortune card. Probably we see the same high, but there's a prominent crest there. In any case, there's a lot of price movement to reach the high, the month's high of October. There's a cash out opportunity at the month's high in October, and an opportunity to open up some protection as well on a multi-month kind of swing trade. There's a swing trade around the month's high there as well that involves a period of sideways, period of volatility with a sharp dip that stand out on at least a 1 month chart. And it looks like we really have a significant move and possibly a breakout to reach the month's high for October. It's also important to point out that the month's high for October is in close time proximity to an important trough or prominent trough for the year, which takes place there as well. Probably a year's low there. There's a significant decline through multiple support levels, at least on the scale of a 1 month chart, to reach the low there. That's it. It looks like the decline starts in September, continues into October, and then out of the low towards the end of the month, there's a notable move higher, standing out on a year-to-date chart, pushing higher, and there's a breakout there. Looks like we have in early November a prominent move to the upside out of a prominent trough for the year. There's a notable move higher, followed by a full retracement of that move, creating a peak or crest somewhere around the cusp of the first and second week of November. We fall from, it looks like the first or second week of November, I'm advised to open up some protection, and it looks like we fall from a support level down to a support, another critical support level on at least a 1 month chart, and then rotate sideways along that support level. That's what happens out of the high. The behavior around the month's low and another prominent low for the year. Sideways S within a channel, so we have a decline from a resistance to a support, a reversal and a full retracement back to resistance, a reversal and a full retracement back to that support within like either horizontal resistance and support or like at an angle. And then also in the end of November, there's significant decline through multiple support levels on a at least a 1 month chart, bringing us to another trough or prominent low for the year. So there may actually be like it's possible that there's a higher high here. I don't. Ooh. It's like a false breakout here in the end of October. All right, so in early December, we have a period of sideways. We'll be bumping along resistance sideways for a bit, and it's pretty bullish. You usually break through resistance, continue bumping along resistance, break through resistance, continue bumping along resistance. That's the Valor card. Early December. There's also a correlation to the start of another rally, and a notable breakout on a 1 year chart. I'm advised to be cautious around the month's high, which is also going to be a prominent high for the year, probably the same highest high that we had earlier. There's a critical resistance level met, so that's why my sense is that it's probably the same high. It's a critical resistance level that's met in December, and it looks like the December low is within close proximity to this prominent high for the year that we see here. Multiple false it looks like multiple false tops or multiple false tops or some sort of trickery around the high for the year and for the month of December, and then in the end of the month there's a fast sudden move higher. So the low forms when we hit resistance, and then we decline with increasing volatility as we move forward in time into the low for December, and it won't be as prominent a low as maybe the November low. And then the sneak preview card for 2024, like I said, is it's the most bullish card in the deck. It pushes the upper end of a range higher, so we'll probably see new highs in 2024. A lot of ground covered to the upside in 2023, my friends. So look out for that. And remember, guys, when you make money from this reading, follow the rule of karma. The world needs you, the channel needs you, and you need you. So make sure you pay a little bit forward, keep the flow going, pay a little bit backwards, and keep the channel going. And then make sure you spend all that out of love. The universe is going to send it back to you tenfold in all directions, my friends. I'll see you on the next one. Is the June high, represented by indolence, the highest price level for the S&P 500 in the year of 2023? No. Is the July high the highest price level? The July high for 2023, is the July 2023 high for the S&P 500 the highest price level for the year of 2023? Yes. Is the December high, the December 2023 high for the S&P 500, the same price level as the high of July? No. Is it lower than the high of July? Yes. Is the high of July the highest high for the year? No. Is the highest high is the highest high the fortune card in August? No. Is the highest high the Magus card in October? Yes. Okay, so that right there, Magus card, towards like the second week, looks like we hit it twice in the second week of October, and then again in the last week of October. Is the December high the same price level as the high in October? Yes. Let me double check because that's kind of contradictory. Is it? The Magus card is the highest high, so I should mark that. Is the January low the lowest low for is the January 2023 low the lowest price level for the S&P 500 in the year of 2023? Yes. Is the low in March, is the price level of the low in March of 2023 for the S&P 500 the same price level as the low in January? Yes. Is the low in April higher than the low in March? Maybe. So are they the same price level? Yes. Interesting. And it looks like we have that breakout there. Is the low in May, is the price level of the low in May of 2023 for the S&P 500 higher than the price level of the low of April in 2023? No. Is it lower than the low of April? Yes. So there's a significant, looks like there's a significant low there. Matter of fact, I think I see the lowest low. Is the lowest low for 2020, is the lowest price level of the S&P 500 in 2023 in the month of September 2023? That's an affirmative. So the lowest low would be that Ace of Discs. Pretty obvious because it's very similar energy to the Princess of Discs. They're almost identical, almost. At least from the standpoint of technicals. Alright guys, so that's pretty much the S&P 500 for 2023. Hit that like button, don't forget to subscribe. Most importantly, follow that rule of karma, my friends. I'll see you later.